14th of September 2022. This isn't financial advice. Let's just get straight into it. So things were looking fairly positive until last night. Market had a huge sell-off after the CPI numbers. So this chart is going back to the percentage of stocks trading above the 50-day moving average. Bottomed out, actually gave a bit of a signal here, and was sort of climbing back above. To tell you the truth, I thought things were starting to look a bit better. There was, higher highs, higher lows. Many stocks look like they're sort of forming pretty decent bases. Admittedly, not sort of a huge number of leaders. But anyway, that all came pretty much unstuck last night. So we went from, let's call it, say, 60% of stocks trading above the 50-day moving average, down to 22. So that's a huge drop in just one day. So yeah, and that's the problem. So we go back to this sort of previous period where you think you're sort of getting these bottoming signals, but you're not. You're just in a bear market. It's sort of oversold, just gets more oversold, and this is where those indicators don't work so well. So I've got no idea what's going on. Pretty big drop across the board. So yeah, this is the Nasdaq. Yeah, a few sort of solid updates. Reclaimed the 50-day moving average. I say higher lows, higher highs through here. Looks, I mean, it still might be, sort of the bottom forming sort of process. Yeah, don't know. So I think the next Fed decision is next week. So if they raise rates more than what's been sort of percentage-wise factored in the market, yeah, then God knows, they tell the truth. Let's go to my stocks. Now, I did sell, this is Digi. Remember, I bought two lots. One, I think it was this first upside reversal day, then here. Sold only 1/4 day before. Pulled back with the market here. Still, nothing done too much wrong here. I've got the stop loss in place. So yeah, just hoping that sort of can hold on to that. Tell you the truth, I'm not too confident at the moment, but it's also one of the themes we're seeing is stocks that are breaking out this year are quite often sort of failing. So anyway, next one is ENPH. This one held up really well along with the rest of the solar stocks. So only down 1%, and also sort of held all of its moving averages. Admittedly, bit of volume here. So yeah, actually pretty strong looking chart considering just how much the market just got hammered yesterday. So this is one of those ones that we'll see how it goes, but it'll almost be tempted to start buying more if it's sort of holding these sort of key levels here. But we'll see what the market does. Fold, I got stopped out of this. Yeah, plain and simple. MRSN, not stopped out of this one yet. Yeah, getting pretty close though. So yeah, a little bit 2 steps forward, 1.95 steps backwards really at the moment. So now I'm just going to have to wait and see a bit. Do we get more sort of downside coming into the market? Can those few leaders sort of hold up? Obviously I don't know. So we'll just have to see. So yeah, this is Celsius. It had a lot of eyeballs on it, and that dropped by 7%. It's just looking a bit all over the place. Now, admittedly, the 50 days catching up, and maybe it just needs more time. But yeah, it is a bit concerning. I guess the big concern for me is you don't have many leaders, and that's also leading to a lot of traders piling into a few of these sort of fewer names. So therefore you have sort of high volatility. Imagine all the stop losses that have been in here getting triggered and people having a go. And so I've got minimal exposure whilst I'm trying to sort of get things right. The markets, I was literally thinking yesterday, I thought, okay, well, numbers are starting to look pretty good. Maybe I'll start to increase the exposure. But yeah, after last night, we're back to square one a little bit. Changing subject completely, I've been working through the Bible Gap Up sort of case study. I'm just going to go through a few more sort of random examples. This is all before sort of yesterday's disaster, but putting it to one side, this is Asana, one of the sort of wonder growth stocks, moved into stage 4, stage 1, big earnings numbers. So that day it jumped 25% on really big volume. And the question is, and I've been sort of recording this down on a spreadsheet, just going through various examples, when's the best time to actually buy that? A common trader thing is to wait for the high of that buyable gap up day to be taken out, and that the theory on that is once it takes out the high, that means all those sellers on that day have pretty much exhausted, so really shouldn't have sort of too much more overhead resistance. Now, I haven't actually seen that to be the case, to tell you the truth. In the majority of the cases, it's actually the best thing to do is just buy it literally on the day of the gap up. And quite often, towards the end of the day, it's just fine, as long as you've got either doing it in options or got a pretty decent stop loss in there. So, yeah, that's pretty quite interesting. So the Asana was like that, because if you waited to the next day, you know, it sort of dropped, so jumped a bit even more. What I've also found is that theory that waiting for the high to be taken out doesn't actually really hold true, because if a buyable gap is going to fail, it'll just fail anyway. So by that, it could, you know, take out the high the first day, then flop. So let's see if I can remember an example. Not at the top of the head. But yeah, another example, this is Academy Sports, jumped 14% of the day, big volume, no need to wait for the next day for the high to be taken out. Might as well just get into it. If you did that, you'd be getting pretty close to stopped out already. Let's see what Zscaler, I was actually thinking about buying this yesterday. So here you go. That day, it went up 22%. It was sort of looking like going into a stage 2, but as I've sort of been finding out, just because a stock moves above some certain high, it doesn't sort of magically make it, you know, a buyable stock. Quite often, these buyable gap ups will sort of finish just here, so not actually taking out those previous highs, and it doesn't mean that it's, you know, that's magically just not going to turn into a monster stage 2 from there, not the least. But anyway, say we bought it that day, and interestingly, I noticed that I've been sort of recording as modern. When I say modern, when I'm seeing live BGUs happening, I'm just writing down the implied vol on the options, and I was expecting the implied vol to be really high, but it's not necessarily the case, because I found out the hard way. I think I did a trade on Roku last year, that when the implied volatility on the day, say after the earnings, so say if a company reports that night, then the next day of trade, so that day, the implied vol can actually come down, because the implied volatility will increase quite a bit those few days just going into earnings. So yeah, it means that the options aren't necessarily as expensive as what I would think they might be. Anyway, just say we bought on the close of the day, that was 187, and versus say we wanted to wait for the high to be taken out the next day, we just paid a little bit more, so that would have been high 180, so 189. It doesn't mean jack, really, because it's only on a nasty day like today, just turned around, and I definitely would have been stopped out if I bought it at that slightly higher price. Might still be stopped out if I bought on the close of the first day, but there's a less chance. So like I say, if the BGU is going to fail, I can't see a relationship between first sort of taking out the high or not. It's either going to fail or it's not going to fail. The other thing I've been taking a note of is, has a BGU had a meaningful pullback after the first day? And I've only found that to be the case in 25% of the case studies that I've looked at. So what that quite often means is the stock will just do a buyable gap up and then just race away. And then you've got no place to buy it. And I really sort of discovered this with ENPH. We've gone over this example before. Let's go back over it. This day here, the time to buy it was just the day of, because the next day it jumped another 7.5%. So plenty of examples of that. I think it was an Upstart. Yeah, jumped 26%. So if you waited for the next day, you would have been just paying more. No, so I'm not seeing any empirical evidence to say paying that bit more, i.e. waiting for the high of the day, of the BGU day, to be taken out is actually reducing risk somehow. I haven't seen sort of any connection with that. Let's see, one more, what's another example? Yeah, not much of an example there. Just sorry, I'm just gonna get my spreadsheet open. I should have had this open. Right. Trade desk. Yeah, here's a good example. BGU, plus 36% in one day. Stock is in a stage 4, definitely stage 4 here, trying to bottom. Could you argue it was going into a new stage 2? Well, maybe. Those shorter term moving averages are turned up, pushed above the 200-day moving average. But anyway, let's just say you waited until the high of the first day being taken out. Well, you would have bought it the second day, and then it would have flopped. Maybe not got it stopped out, but either way, this stock was going to fail. So you can see here, just because it's cleared the high of the first day, hasn't actually really made any difference. And like I say, I've gone through 50-ish case studies now, and that's sort of statistically proven to be the case, that you might as well just buy it the first day, waiting for it to push higher. It hasn't had any sort of real change to it. Anyway, I'm going to keep working that Bible Gap Up study. I want to do another 50, so I get to get up to 100. In the meantime, minimal exposure to the market. It's clearly sort of all over the place. So not making any money at the moment. Not losing really money either, which is probably not a bad thing. So we'll just have to see how it goes.